Hello, income investors, harvesters, and income growers, or should I say income accelerators. Today is June 22nd evening and a hot day. And today I'm going to talk about hot ETF, which is YBTC. Actually, there are two of them, YBTC and YETH. So I'll be looking at these two in separate videos. This video is about YBTC, which is a Bitcoin covered call strategy ETF, and it's from Roundhill Investments. What makes this ETF more interesting is the high yield, weekly payout, get paid every week. That's true. And also, it provides direct exposure to the Bitcoin without study and other issues that's associated with cryptocurrencies. So let's look at how the fund works, how it functions, pros and cons, and then I'll share my final thoughts at the end of the video. Stay tuned till the end. Okay, quick disclaimer here. I'm not an expert in cryptocurrency or I'm not giving any financial advice in this video. This is just about knowledge sharing. I'm just sharing my thoughts, observations based on the data and based on the information I have. And you can also share your comments and do your own research before you make any decisions. With that, let's move into the introduction about the fund. So Bitcoin covered call strategy is basically a typical covered call strategy. So basically, the fund aims to generate weekly income using covered call writing, and they have exposure to the Bitcoin exchange traded products or exchange traded funds, which have direct exposure to the underlying asset, which is the Bitcoin. So why this kind of exposure where they invest in other ETFs? Because Roundhill Investment has chosen to hold IBIT, which is iShares Bitcoin Trust, which is just like holding an index exchange traded fund. So since they already have this IBIT, which is pretty low cost ETF tracking the Bitcoin prices, the fund chose to hold this fund as the underlying holding. And using that underlying holding, they actually write covered calls. And using that strategy, they're able to generate income weekly and distribute that income every week. So that's how the fund works. Simple covered call strategy. The only difference I see is the weekly income. There's the timing of the dividend payments, so the frequency is pretty high. It's every week. So that explains the whole strategy. Very simple. Now the ticker symbol is YBTC. Price is about $44.66 as of June 20. And this fund was started back in January 2024. It has net assets of about 222 million, pretty decent size. Expense ratio is on the higher side, 0.96%. And all this information you can find it on Roundhill Investments website. Go and check out their website and read all the articles, all the information about the fund, the holdings, fact sheet, etc. By the way, this is not a recommendation and the video is not sponsored. I am the only among the few YouTubers who are giving independent analysis and not affiliated with any funds, any investment house. So this is going to be purely based on the data and based on my analysis of it. So stay tuned. And price returns of the fund actually relate to the price returns of IBIT. So IBIT has an expense ratio of 0.25 and it's from the iShares. The price return of IBIT, which is also the holdings of this fund, like it's not this fund, but basically the underlying funds held by the YBTC. IBIT provided about 120% returns, whereas Bitcoin provided 127, 128. So the return variance is always there because you are talking about three-digit returns, and there's going to be a higher variance between the BTC underlying versus the IBIT, which is the fund. This the reason for the difference could be due to fees and also due to the fact that there could be additional charges involved in you know tracking the underlying asset. So just like an index ETF slightly deviates from the main index, you see the same deviation here. Return variation is relatively low and expense ratio is pretty good. So this is the IBIT, which is the underlying holding. Now let's look at the price returns of YBTC. That's what you have been waiting for. Uh, Price returns 1 year since the fund was started, like it's minus 10%, like disappointing. Like 1 year ago, the fund was at 49.82 NAV. Today it is like around $45 roughly. And for returns, benchmark is returned 55% and in the same period. And you are seeing this fund returning minus 10%. That's highly disappointing. Data shows that I'm not sure what are the reasons. One of the possible reasons is the higher jump in the Bitcoin prices, which may have resulted in a loss on certain options booking losses. Uh, that could be one of the reasons. If you know the reasons or other factors leading to this performance, please drop it in the comments section below. And I know we can have a great discussion on that and probably more insights for the benefit of everyone, including myself, because I'm not sure what are the other reasons for this performance. Okay, now let's look at the dividend yield. The fund has a very limited history, so I was able to take the dividend yield only for the 26 weeks because the fund switched to weekly dividends since December 2024. So if I look at the 26 weeks dividends, it's about 11.7, and that's an average of 45 cents a week. And if I annualize it, like 52 weeks makes 1 year, it comes to about $23.40. So on a $45 stock price, roughly, dividend yield works out to 52.4%. If you do the exact calculation, the 52-week dividends divided by the stock price, you get 52% roughly. Okay, this is not financial advice. This looks very, very big number. Like it's very attractive. I'm sure many people are trying to open their eyes and see pretty high dividend. Not a financial advice. I'm not the crypto experts. I'm not recommending or suggesting this fund because of this reason. Obviously, crypto funds provide high returns. You can watch one of my previous videos about BTCY, and you can see high returns in that case too. I'm familiar with that fund more than this one because BTCY from Purpose Investments has a pretty longer history. Okay, fund dividend yield is pretty high, super high, not sustainable in my humble opinion. Even if you can get those returns, it could be 52% plus 1 year, it could be minus 10% next year, and it could be 20% up next year, and then minus 40% next year. It can go all over the place because it's a highly volatile asset. And higher yields of 20% plus is achievable, especially in the cryptocurrency based income funds. Always it's variable and it's always unpredictable. So if you're looking for something like a regular income, this is not going to be a steady amount of income, just like your, XYLG or XDT that provides some kind of a steady income despite minor variations. In this case, the variations are going to be dramatic. So which means that if you're going to be depending on this fund for income or you're planning your monthly income or expenses or budget based on this, it is going to be pretty erratic. So that is something I want to highlight here. It's not attractive in that sense. So with that, let's look at the total returns. So with that, let's look at the total returns. In total returns, I've taken both the price return minus 10.4% here and also the dividend yield. So all in all, if you look at the total return, it comes to 42% minus 10.4 and a dividend yield of 52.4. If you just add up the both numbers and net you have 42% yield. Pretty attractive. Like it's almost like you're making more than 3% a month. Uh, Poor performance on the price front because Bitcoin gave 55% return. That's a concerning factor. And superb distribution yield. That's the positive. We have to give thumbs up for that. Total returns, which is the major chunk, comes from distributions. So it can be a kind of a downside. I just put a downside. It could be an upside also. It could be plus for some people who are looking for pure income. Um, and due to the change in the frequency from monthly to weekly, I think some adjustment has happened. And we have to observe this fund for at least another 6 months to see how it performs, before coming up to any conclusions. And if you're interested more in these type of funds, look at my previous video on BTCY. So for this, you can go to my channel and watch this video, which is about uh, Purpose Bitcoin Yield ETF. And it's 6 months ago I made this video, and this will give you a perspective about this type of funds because BTCY has a 3-year history. But one disclaimer warning here: I'm not advising you to consider this fund. This fund is based in Canada, and there is also a US dollar version of it. However, you can just take a look to get an idea of the history or the performance track record and how these funds work basically. Um, but this could be slightly different in terms of strategy, but the hot call strategies are pretty similar and the performance can vary. And you'll get an idea how this has performed for 3+ years. And that will give you some trajectory about other funds as well. So with that, let's go to the next section, which is most interesting, pros and cons. These pros and cons are going to be similar to what I discussed way back 6 months ago, not much different. But for people who are newly, watching this or you come to this channel, feel free to drop your comments or, subscribe to the channel if you want to know more. I see 90% of the people who are watching are not subscribed. So feel free to do that. And pros and cons. Let's look at the pros first. You get a Bitcoin exposure plus a high level of income, and you get relief from self custody of Bitcoins. And diversification into alternate asset classes is a very big plus. This is CBOE or exchange listed, and this has a lower volatility compared to the original Bitcoin. But sometimes this can go up and down. We never know. Um, it has some kind of similarity in volatility, but sometimes due to the covered calls, the volatility will come down. These are the pros. And of course, every fund has its own limitations or drawbacks. This one has a higher expense ratio, limited upside potential due to the call writing, highly volatile. Even though I said lower volatility, sometimes things can go a little unpredictable and it's pretty high volatile asset. And this is the new asset classes with limited history. Now it's getting established. A lot of Bitcoin funds, ETFs, BlackRock, iShares, ProShares, and all the big fund managers are coming up with products based on the Bitcoin with yield as well. And also the regular ETFs, which are just tracking the price of the Bitcoin. And there will be a higher variability of yield. Yields are not going to be consistent. Like sometimes it will be plus 50%, sometimes 20%, sometimes negative, sometimes flat, and so on. So those are the cons of this fund. And I will also extend further and talk about the suitability of this fund. So that would actually summarize my thought. I've already summarized some of the thoughts here in the pros and cons, but I'll just extend it further to give you a more broader perspective as we come to the end of the video. Uh, I hope you liked what you're watching so far. If you have any questions, any comments, please feel free to share here in the comment section below. And final thoughts, like basically YBTC is relatively new, despite the fund having 1 year history. So since they started weekly payouts in December 2024, we had to wait till the year end to see how the weekly payouts are panning out over a period of 1 year. And once we look at 1 year performance around December 2025, we will get an idea. Probably December 2025 or January 2026, around that time, if we do a 1 year review, we will get a better idea of the performance. And this needs to be a smaller portion of the portfolio. And this fund plus any crypto exposure generally would say that be 5 to 10% of the overall portfolio. I agree with that. Sometimes when price goes up, sometimes this exposure becomes higher. So you got to be very watchful about how much exposure you want to keep. I know a lot of people who are investing in Misty or MicroStrategy yield ETF, and they are also investing in Bitcoin, Ethereum, and so on. Problem is you're adding more concentration on these funds. If you have 100,000 portfolio and you're just investing $5,000 in these funds, I'm okay with that. But if you're going to be investing major chunk of your money in these kind of different products and your multiple products which are in this similar kind of asset class, it's pretty risky. Probably the high returns are pretty attractive and you're drawn to that. Like completely understand. Even I am drawn to this and I have a small exposure um, to this, but I keep track of this and I also look at the exposure to other assets, other classes so that I am protected because anything can happen. Like I'm not a Wall Street guru, but I'm just telling you that being a normal person, a normal investor, we have to be very careful about not burning our capital. Okay, this is designed for certain type of people, and not everybody would like to invest in this type of product. and it's not suitable for everyone. This is designed for people who are seeking regular income, weekly income, so whatever you want to call it, and you want to benefit from the Bitcoin price appreciation, but your upside is going to be capped. Like you won't get as much upside as you would get if you invest in the original underlying asset, which is the Bitcoin. Let's say Bitcoin goes up by 50% in a year. You will not get that. You may not get that much of appreciation. Probably you may get 20-25% appreciation. And plus, you are also getting the dividend yield. So adding up those two, also still you'll be getting a slightly lower amount of appreciation compared to the original asset. And sometimes covered call ETFs outperform the underlying asset too. It happens, but it's sometimes rare. And to benefit from this high risk or volatility with cryptocurrencies, you can choose these funds because the volatile situation actually works in your favor. How does it favor you? Because you are writing calls, and the covered calls are generating premium, and the covered calls are generating premium based on time value, intrinsic value, and the volatility. So a lot of technical details, but the volatility actually boosts the performance of some funds because the volatility actually boosts the premiums of the options, call options as well as put options. So when the premiums of the call options return increase, the fund writes higher priced call option and is able to generate more premium, and that increases the amount of distributions. So that's how these funds work. So when there is a high volatility, these funds are actually able to generate more income. That's favorable for investors. So volatility actually works in the favor of a covered call investor. So that's something you need to keep in mind. So with all that, I would say that these funds are not perfect. It's highly risky. Keep your exposure small. Gradually increase your exposure as you get more and more comfortable. And definitely you're going to see a good amount of cash flows and returns, especially if you're an income seeking investors. If you're a pure growth and pure Bitcoin price appreciation oriented investor, you can look at the other funds like the iShares, IBIT. But this is suitable for hybrid as well as income investors who are looking to get that income stream from the Bitcoin. So I hope you like this video and I hope you like the discussion. If you have any questions, anything, comments, drop in the comment section below, or you can even join my Facebook page. You can subscribe to the channel and follow it to get more updates. Thank you and have a great day. Happy investing.